Welcome, everyone, to the C-Suite Sales and Marketing Perspectives podcast. I'm Steve McDonald, your host. Today, I think we have not only a surprising conversation, but really interesting conversation, and one that is really important to our overall growth as B2B companies. We have on Tom Stuart. Tom, you are the CMO of Lula. Uh, you've actually, though, you've introduced large brands all throughout the world, like eBay. You've lived in 6 different countries. You've got startup experience. You're at Lula right now and making major inroads. But before we get into our topic today, which is, that our greatest challenges for growth as B2B companies are actually internal. That's your point of view. But I'd love to, just before we start on that, just maybe give you an opportunity to expand a little bit on your background.
Sure, yeah, thanks, Steve. I guess my working life started out when I left university and joined British Airways, back when companies like that had their large graduate schemes. And I spent 8 years there, predominantly in different marketing roles. And it was great learning ground. I learned a lot of things, that big brand discipline, how to really build and communicate brands in structured ways. I also learned that working in big oil tanker type companies like British Airways, it wasn't for me. So when the opportunity to then go and join eBay and join a team that was tasked with taking eBay into back what then were emerging markets for the business, places like Russia, Brazil, Mexico. That was a great opportunity for me to go and really immerse myself and surround myself in kind of digital, pure play, online best practice, which is really what I wanted at that stage of my career. And it was a great experience, not just learning how to operate in digital environments and across different markets, but really exposed me to kind of the end-to-end side of marketing, from strategic brand proposition development through to really optimizing growth marketing, performance marketing initiatives. But then I got out of the blue LinkedIn message from a retailer in South Africa, and they were looking for someone to come and build up an e-commerce function for them, which, I'll be honest, wasn't on my or my wife's radar at all at that time. But in one of those kind of serendipitous moments, one conversation led to another, and before we knew it, we were on a plane to sunny Cape Town with the intention of going there for 3 years. And nearly 9 years later, we decided to leave and come back to the UK. But in those 9 years, I went and worked for a company called Home Choice, which was South Africa's 7th largest retailer, and built up an e-commerce function for them. Joined at the time where e-commerce was still fairly nascent in South Africa, but the business knew it was growing, and they wanted someone with my background to come in and really kind of show them how and build that roadmap out to turn it into what was, by the time I left, about 35% of the business in terms of sales percentage. 4 or 5 years into that journey, I then had another out of the blue conversation with a chap called Trevor Gosling, who was the co-founder and CEO of Lula. And Lula was a very small startup fintech in South Africa there, targeting SMEs and really solving that access to working capital problem that exists. And they were looking for someone to come in a sort of broadly similar remit to what I did at eBay and then Home Choice, come in and start up a marketing function so that they could take this great idea and this product market fit they had and really help scale it. And over the last nearly 6 years, that's the journey we've been on. We've morphed from being a provider of business funding or business loans to a fully fledged bank for SMEs, the first of its kind in South Africa, and grown from 20 to 200 people, more or less. And I've gone through several funding rounds. So that's been quite a journey. And I suppose I probably had a little more hair before I started on it, but life wasn't quite as satisfying.
Well, what's interesting, that background, big B2C background, big B2B background, it gives you a global background, big enterprise startup. So your opinions, I think, really matter here. And one of the things that initially, when we first talked, we were talking about, what do we want to pick as a subject to talk on the podcast? And we talked about the biggest challenges that it takes today to grow a B2B business. Since you and I had our first conversation, I've asked that question to at least half a dozen other CMOs and chief growth officers. And what's surprising is a trend that's coming out is that one of the biggest barriers is us. It's internal, but we don't usually sit in board meetings or executive meetings and talk about how we're the problem. I'm
Yeah.
not saying we're the problem, but where the greatest challenge lies. We think about our market and we think about competition and we think about our go-to-market strategies and everything that's external that we're trying to influence to grow. But we very rarely look internally. And so I just love to start us off here and get your opinion why internal barriers to growth are some of the greatest barriers that we have as B2B companies.
Yeah, I think it's in our blood as particularly marketers. We are constantly looking external. We're focused on the customer, we're focused on the competition, we're focused on market trends and different marketing channel opportunities. And therefore, it's almost kind of understandable why we often forget to look internally and really understand and align around what matters there first. And I guess my experience, the touch on, working from in a range of industries, but more importantly, working on big brands already with lots of people, lots of process, lots of assumptions in the business, and comparing that to the teams I've come into and joined where it's been much fewer people, where you're still building that internal platform. The one thing that's really stood out to me there is if you can get those internal platforms and alignment around key things like who your customer is, what their needs are, what your brand needs to stand for, how you plan to grow. If you can really get alignment around that early on, the chances of success are much greater, or put it this way, succeeding is much quicker and less painful than where you're inheriting a lot of assumptions, maybe on shaky foundations, or where there's just misalignment come in over time, which I guess to some extent is inevitable as businesses grow and more people come in with their own views. So I think the really successful businesses understand that, really focus on getting that in alignment and then continually evolving that, because as we know, customers don't stay the same, the market doesn't stay the same, and brands can't stay the same. So yeah, how do you ensure that alignment as you grow and evolve is critical as well.
I saw a study that literally said that the amount of alignment just between marketing and sales on the definition of the ICP is at 16%. 16%. So it makes perfect sense what you're talking about here. If we're not aligned internally, we're the team, right, that is going to make things happen. And if we aren't aligning on things as important as our ICP, then we're setting ourselves up for failure. And it also makes sense from the point of view, when I think about it, that, VC firms, private equity, the rounds of funding you've gone through, they all invest in the team first and the idea second. Now, you have to have a good idea, right? But if you don't have the right team to put it into the market and grow, then you're not going to be successful no matter what. You could have the best product. I was talking to a VC yesterday. He said some of the best companies, the best technologies, the best ideas out there have just failed miserably because they didn't have the right team. They didn't have the right go-to-market. So what if you're kind of thinking, how do we then align to grow and scale? Like, what are your greatest thoughts on and recommendations for us on how do we start this alignment process? Because it seems to be such a big deal, right? Alignment between the go-to-market teams is something that everyone talks about. So I'd love to hear your words of wisdom on that front.
Sure. Yeah, I mean, and the survey results you mentioned there, that 16% alignment between marketing sales. I've worked in some business where it would, 16% within the marketing team, let alone going outside with that as well. So, it's, I don't want to cast stones purely over to the sales side of the fence. Yeah. I think for me, the starting point and potentially the most critical point to start aligning on it is really that understanding of your customer, your ICP. And most businesses will have that broad understanding. But for me, broad isn't enough. It's got to be really, really precise. And that's where I've seen plenty of difficulties or discrepancies arise over the different roles I've had. Even at Lula, we didn't get this right to start with. We target SMEs, um, but SMEs is fairly broad industry in any market. And early in our journey, there was misalignment between marketing, sales, and credit, the credit risk team. And when you're a lending business, the credit risk team is a key part of the machine. Over who our target audience was. Is it the kind of smaller, perhaps newer set of SMEs where there's a lot of them in more desperate need of funding, capital, or is it the more established, fewer, but potentially safer? And just that slight discrepancy between where the line in the sand sat between those two caused a huge discrepancy between the quality or the type of businesses marketing were coming in and the credit response and offering to them in terms of yes, no, and at what price. And then the sales tactics, how did they then try and convert those customers? It was only when we really broke that down, having seen growth, well, not necessarily growth, but I guess conversion rates and customer satisfaction, not quite what we wanted, that we understood actually there was a different view of who the customer was and who we should be bringing them in. And even once we aligned around, okay, precisely who that was, it's then about, what do you know about them and what are you trying to solve for? And this is where I guess, in my view, a lot of teams often don't quite go deep enough on the demographic and the psychographic, but even in the psychographic, okay, you kind of get the understanding of what their problems are and their attitudes and values, etc., as people or employees. But are you really understanding the impact of the problems and why they want to solve them? And again, businesses often don't do that, but if they do, it's not communicated broadly. The why is so critical for me. Why are you solving that problem for SMEs? Because if you do go through and piece that together and really align around not just the who, but what their challenges are, how you're solving it and why, then I think you start to develop a really strong brand proposition. Brand proposition, but I don't know. My view on it is perhaps slightly contrary to the norm. It is, it's not a list of the features and the benefits you solve. It's more the what problem is it and why are you solving it for the customer? I think it's Simon Sinek who has that great quote around, all brands understand what the problem is they solve. Some brands understand how, but very few understand why they solve it. And understanding that why and making sure that's consistent across, or understood consistently across the business is key. Because as I said, it allows you to develop, I think, then a really strong, powerful brand proposition. But again, getting people to understand that and see the why rather than just the what we offer is often where a lot of misunderstanding or misalignment occurs. And again, our Lula example would be a sales team for a long time thought, what the problem was and how we solve it. We offer fast access to working capital. Actually, marketing and product were working with the assumption that we're simplifying cash flow management, making it easier for business owners to grow their business. Quite different. So sales and service and customer service team were talking very much around the fast access to capital all the time. And but the marketing messaging and the products we were designing were broader than that. We're simplifying cash flow management. So it might be fast funding. It might be a business bank account. It might be a cash flow tool we have. And where we really felt it actually was in, I guess, the way sales approached a lot of the downstream funnel activities, cross-sell, retention. It was always reverting back to that. Do you want more capital? Can we provide you with another loan? Not really building in that understanding of we're here to solve cash flow more broadly and help you grow your business. So let's talk about other products. Let's build more of a partnership beyond just the funding. So I think there's some examples there of just how really understanding the customer and then the problem you're solving and why, and communicating that consistently, it is critical. Without a starting point, you can have product design tools in one way, sales looking to sell things. It differs to how marketing are communicating them, and it just lacks the impact it could otherwise have.
One of the biggest things that I see, and I did a lot of fractional work, and I talked to a lot of folks like you from the podcast here, is that all the go-to-market teams feel like they have a really good understanding. They feel it. And you talk to sales and that story you just mentioned, I'm sure they wouldn't say, no, we don't really understand our ICP, right? You talk to customer success, you talk to the whole team. Here's some things that are interesting. So like Gong is that company, right, that records, like they're the biggest that record sales conversations, and we can listen in and everything. And a lot of companies will say, we're talking to customers and prospects every single day, right? Here's recordings and everybody can listen. Well, the stats that Gong came out with was that the sales reps actually talk 2/3 to 3/4 of the time. So right then and there, there's not a lot of learning going on if we're doing the majority of the talking. And what happens then is that the talking that the actual prospect does is in reflection to what we're talking about, which is us, not them.
Yeah.
So not to say that there's not tremendous learning there, but if we're really trying to understand the why, we don't talk during the whole conversation, and we don't talk about us. And we don't have a conversation with them that has a shield up where they're being sold to, and they know they're being sold to, right? That is not a recipe for the best learning and ongoing understanding of your ICP. Same thing with customer success. They're putting out fires, and they're answering questions about what? About us, right? And how our clients are interacting with us. But our clients have, like those SMEs in Lula's market, they have far more concerns than just what Lulu's providing, right? And they want that trusted advisor status. They want to hear from us and help them solve this, not just this. Even though this is extraordinarily important, working capital in any business, my goodness, how important is that, right? So I guess my conclusion and takeaway from what you're talking about here is not only is there a definition issue, but there's a deep understanding issue. And without any of that, you don't really have a foundation to start from.
100%. Yeah. I think if you're either solving for within the business, if you're looking to solve for different audiences, or worst case, different audiences and different problems and reasons why those problems are important, then you're never going to be aligned. And I think for any business, particularly in that startup scale up phase, doing one thing and doing it exceptionally well, solving that one problem better than anyone else, that's the starting point for growth.
Doesn't that require knowing? Doesn't that require knowing your ICP better than anyone else?
Yeah, exactly. And I think for a lot of, when you're taking on bigger incumbents, because they're bigger, because they're probably diversified, they've got such a broad audience. Yeah, they are starting to lose touch with pockets of those. And that's the classic case of where challenger brands can come in and really be effective, provided they understand that audience better than anyone else.
So interesting, the idea of these large established brands and the challenger brands, and we all want to move from startup challenger brand to big established brand, right? And what are the internal growth barriers in your mind on around alignment and growth on how to scale when you're scaling the business?
Yeah, I think probably when any particularly new CMO comes in and is tasked with building up a team, one of the first questions that you're expected to answer is, where are you going to invest? Which resources do you want to bring in? Which channels are you going to focus on? And why I think that's the wrong question to be asked or answer in the early stages, because it assumes everyone's got a consistent understanding of how we've grown so far. And very often, again, that's not the case.
Right.
When I started at Lula, if we asked the sales team how we've grown, they'd probably talk about, it's been marketing bringing some leads, but we do a great job of converting them. And then it's kind of an account management growth technique that that helps those accounts or businesses become far more loyal customers. The marketing team would have a different view of it. It's all kind of digital or content driven marketing that brings in the lead. Product would have a view of, well, it's the great flexibility of our lending products that have driven this retention. So everyone would have a very different view. What's important, I think, is to very understand and get buy-in across teams around actually, based on the data, this is how we're growing. And within that, I think a really important thing to understand is, particularly in earlier stage businesses, acquisition doesn't equal growth. Growth is ultimately driven by retention. So how you judge how you're growing is, don't look at it just through to where's our lowest or highest volume acquisition channel. Now, what's driving ultimately retention and lifetime value? How are you driving that? So understanding and aligning around that is key, because that's obviously then when you can start to prioritize where you invest and spend time. And you'll be doing it from a solid foundation of the data suggests this is the right place to go and everybody's bought into that. And again, that helps just with getting buy-in from your finance teams on why you're investing somewhere. Conversion and customer journey processes can be built around those areas, those growth loops or channels at a more tactical level that you choose to focus on. Customers that are brought in through from different channels or from different sources are going to be slightly different, but knowing where you're bringing them in and why allows sales teams to servicing teams to understand what those customers are, what their needs are, and essentially convert them more effectively. Allows product teams to develop a product experience that matches them more consistently. It allows a greater understanding of how we're going to effectively cross-sell and grow the value of and retain these customers. So I think, really understanding how the business grows and then aligning on, based on that, how we plan to grow is also critical. And again, but something that's often overlooked. There's just a lot of assumption that marketing will bring in leads from wherever. Sales will start to convert whatever comes in at them. Product are broadly designing experience for an ICP, but not understanding the nuances of where customers might be brought in from or what they're likely to do post-activation and how you build that retention. So I think, again, like customer aligning on how you plan to grow based on how you succeeded so far, and then evolving that obviously is kind of various activities reach saturation point is ultimately critical as well.
One of the many things that you said there, which were really important, was how sales is basically, they're rewarded by bringing in new business, right? And they're not always as defined on the exact fit to the ICP because they've got a quota, right? That's how they're compensated. I'm not going to be around if I don't hit my quota. So if it's a little bit outside of the ICP, but I can get a good, contract in, let's do it. And I'm not sure I would be thinking much different if I had the same quota, right? And I was providing for my family. However, I've talked to a lot of CROs, so I want to ask you about this question. One of the greatest alignment opportunities as you scale is aligning around when we say no to a deal. Those deals that come in, right, that aren't defined as our ICP means that we're not as well equipped to service them. It's going to take us more time and resources, and they're not going to be as happy, and they're going to churn, and our NPS score is going to be hit, and our NRR is going to take a dive. And you yourself said is like growth isn't as much just about new logo acquisition. It's about keeping customers happy, right? And expanding those relationships. And it's hard to keep them happy and expand relationships when they're not really who we're set up to serve. How do you guys align around saying no and agreeing on that?
Yeah, and I think ultimately it comes from understanding, well, first of all, I think to do that effectively as a business and as a leadership team, you've got to have buy into the principle of growth is going to come through retention, however you want to measure retention, but growth is going to come through customers who stick with you.
Right.
No greater sign that you've got product market fit and you're adding value than people coming back and using you on a regular basis. So with that principle in mind, it's about looking at who your retained customers are. And they may be sort of slightly contrary to the norm from a CMO's perspective. This is where I kind of always try and work very closely with data and take a very data-led approach to, how do you break down who your most loyal customers are, your retained customers? First of all, how are you defining retention? What is your retention metric? How do you assess that somebody is retained? It could be anything from in our world at Lula. It could be, how many times do they come and draw down on their revolving credit facility? Are we looking for someone to do that at least once a month? Is that therefore a retained customer? It could be something to do with the volume of banking transactions. So there's a number of ways you can assess it, and aligning around what a retained customer is key. But then working back from that, what caused that person or that group of people to become retained customers? What journeys did they go on? What behaviors and actions did they take? All the way back to where they came from and the type of business or individual they are. And then piecing together, that's our customer. That's the person who, if they come to us and we get them to do A, B, C within the set time period, they are likely to become a retained customer and deliver on that metric that adds value to us and adds value to them as a customer. So I always try to take a very analytical approach to it like that. And at the end of that, working back from that customer who performs the metric that you deem as indicative of retention, you start to understand that these are the people who will do that. That's our customer. That's who we go after, and everyone else we effectively say no to. And often in the marketer's world, saying no means I'm not going to target them. I don't want to bring money, or certainly I don't want to bring them, or I don't want to spend money bringing them to our offering.
So there's a third area that I think is really important to discuss, and that is, as you grow as a company, you evolve. I just had a chief sales officer and CMO on the podcast earlier this week. They had gone from around 7 million to over 100 million, and they're going to hit 250 million in the next 2 years. They've got it all mapped out. And I said, fundamentally, there have been things that have just changed about our company and who we are at every growth stage. There has to be some kind of alignment internally around how you evolve and how you adapt. How do you think about that? And is that very overt in that planning and how you're doing that? As a C-suite executive, how do you create internal alignment around that evolvement?
Yeah, this is a big one, absolutely. And I think my view on this is the one of all the key sort of internal alignment areas. This is the one that gets overlooked the most. Because people, those who do align effectively spend so much of their time saying, right, who are we targeting now? What's the proposition now? And how do we build that initial growth engine? And almost the sort of the view that it's going to need to change in a year or 2 years' time gets overlooked. And by the time a year or two comes around, it's kind of either too late, or performance starts to dip, or something else blows up and you're kind of fighting a fire somewhere else. So this is, I think, a critical one to get agreement on and map out early on, but is overlooked. I think that for me, probably the most important step is understand how you're going to try and stay in touch with your customer and their changing needs, and make sure your brand is relevant, your product evolved, and that you're not allowing alternatives and competitors to become more attractive. And a big part of that is, how do you do that? Where do you get your source of information, your source of truth from customers from? I mean, you mentioned earlier, sales. A lot of businesses take feedback from sales teams and take that as gospel. And there's a lot of relevance in that. And I never recommend don't listen to your sales team. But I think to your point, it's not always the most reliable or the complete source of what is really happening. So it's about, I think an important step is just almost like setting the guidelines on, this is where you're going to take information from. I personally a big believer in refreshing at least once a year your jobs to become research on your core products. Asking those customers, what are your pain points, or most important pain points, and how satisfied are you with your alternatives to solve those? And seeing if they change. That gives you guidance onto where there's opportunities to solve more of what is important to them. I find valuable doing that with customers you spoke to before, ideally existing customers, and see if, since they've been with you, have their views changed? If you said you were going to solve problem A for them, which was previously feeling very unsolved for them, has that shifted? If not, well, you probably need to keep focusing on your core product and offering. But if that's improving and they're now listing other challenges that are still important to them but are going unsolved, well, there's potentially product extension opportunity. So I think, and that gives them more, I guess, quantitative view to look at alongside purely anecdotal, real-time feedback from sales. And I suppose there's no substitute for actually just spending time with your customers, walking in their shoes as well, and really talking to them about, again, the why. Why is that problem important to you? If we solve that for you, what would that mean to your life as an individual, or your effectiveness as an employee in a B2B environment? But however a business chooses to do it, I think it's important to have some guidelines and understanding of this is how we're going to stay in touch with our customers and understand what's important. And we deem this as reliable information. And that's kind of what steers our decision making, rather than kind of leave it to sales have picked up this product and done some research over here. Marketing did some brand monitoring and brand awareness survey, and it came up with this. And before you know it, you get a lot of input, but no real way of assessing what's valid and what's important. So I think that's critical. And then how do you communicate and instill that feedback and those learnings and insights around the business is then obviously key as well. It's all very well getting the information, but without sharing it and distributing it, there's no action out of it. And my view here is it's best done bottom up. I've been in a lot of businesses. I've still been given countless presentations myself as here's the evolved brand proposition, or here's how we've tweaked or identified a new customer segment. You stand up and you do that at a town hall or quarterly presentation, and you can see the sales and the customer service team's eyes glazing over as the marketer gets up again. What I found far more effective is once you've got those insights and conclusions out of it, bringing them in at a sort of an on the ground working level. This is where I think product marketers play a critical role. Going out, sitting with the sales teams in the course of, talking about go to market strategies or how we drive more retention, sharing those learnings in sort of closer groups, more real life environments that just bring it to life and make it feel more real for the teams that are there on the ground having to deliver or execute on those changes. And that's where I think a lot of cross-functional working is key as well. If you have those cross-functional tries where product and marketing and sales and customer service teams, engineering teams are kind of embedded together, they're the great places to share those learnings because everyone hears it, sees it, and can discuss how it needs to be brought to life across the function.
So Tom, I have one last question for you because there's been a lot discussed and a lot of wisdom here, but if you had to distill it down into one 30-second takeaway for the audience, what's the most important thing out of everything that we've said here? How would you frame that?
I would say 80% of successful growth comes from aligning and having clarity within the business, understanding what you're going to solve, who's for, and how you're going to do that repeatedly, i.e. how you're going to drive the growth. If you do that, you're in a very strong position to win, particularly if you're in a disruptive business that's offering a fundamentally better solution than the incumbents. So, a lot of people tend to neglect that and focus more on external competition.
If there were people that had questions, and I know there will be, would it be appropriate that we gave out a link to your LinkedIn profile so that people could reach out and ask questions?
Yeah, certainly. Yeah. Find me on LinkedIn. Tom Stewart at Lula.
Fantastic. Well, Tom, thank you so much for coming in. And I think my one big takeaway is, and I'd love you actually put a number on it, like 80% of growth, like is first with internal alignment. If we just thought that way, right? We think externally 90% of the time, 10%, we think about our own teams and we think about we're in meetings, we all got to agree on things. We think about this, but actually getting alignment is very difficult. And the B2B world has proven that time and time again. So I think you just have refocused us on what's important here. And I really appreciate that. Thanks for coming on today.
Absolute pleasure.